Kia ora, I'm Mary Jo, Kiwibank economist. So the New Zealand economy has been well supported for the past 20 or so months by rising house prices, resilient household consumption, and robust demand for exports. Now the latest Delta outbreak will be a setback, but only temporarily. It's important to note that the contraction we'll see in the third quarter is not reflective of underlying demand. Most restrictions have now lifted and activity has picked up strongly. So we expect economic activity to rebound in the fourth quarter and beyond. Next year is also expected to see the return of international travel. Our borders are set to finally creak open early next year, which would see greater contributions from the tourism and education sectors. So over 2022, we expect the New Zealand economy to grow a solid 4.1%. Now the labour market is expected to remain tight given the unwavering strength in demand for labour. Inflation is also forecast to remain elevated for much of next year. However, we see the underlying dynamics here changing. Supply-driven inflation will eventually abate as global supply chain issues are eventually resolved, and we're actually already seeing shipping costs fall. But now we're more concerned about the strength in domestically generated inflation, which can be more persistent. Now with high inflation and a very tight labour market, wages are also set to be on the rise in 2022. Now turning to the housing market, it's set for a period of consolidation. There's a lot weighing on house prices. There's rising mortgage rates, tighter LVRs, tougher access to credit, property tax changes, and perhaps most significantly, more supply coming to market. So there's a material chance of a market correction, albeit a modest one, taking place next year. Now, given the state of the New Zealand economy, it's clear that emergency settings of such low interest rates are no longer needed. With inflation and employment running above target, the Reserve Bank has every reason to continue normalising monetary policy settings next year. The current cash rate of 0.75% has at least another 7 hikes in the pipeline, and that means lending and saving rates will rise further next year alongside the cash rate. Now with record high terms of trade and supportive interest rate differentials, we also expect the New Zealand dollar to strengthen over 2022. Now just a final note, COVID is still the biggest headwind for the New Zealand economy, and Omicron is a timely reminder that the pandemic is not yet over. However, what we're finding is that these COVID-related restrictions are proving to have a diminishing economic impact. And that's because businesses and households have clearly adapted and are better prepared. So it would take a considerably worse disruption than what we've already experienced to materially derail the economy. Overall, we're feeling cautiously optimistic about 2022. That's it from me. Happy holidays, and I'll talk to you in the new year.